Whether or not you're exercising it, your personal credit is the most powerful financial asset or attribute that you have in your arsenal. Your ability to change and alter your life to whatever you desire it to be cannot be achieved any faster and more efficiently than with your personal credit. The Federal Reserve's current policy, monetary policy for the last 14 to 18 months or so has been putting a direct threat to your personal credit. And your best defense is likely going to be, one of your best defenses is likely going to be being in tight relationship with at least one or more credit unions. The Federal Reserve's objective, as of the last 14, 18 months or so, has been to stem the tide of inflation and to roll it back to what they consider their 2% target rate. One of the biggest factors that has made that challenging, particularly in the last 6 months, has been the labor market. The Federal Reserve has been explicitly clear that the labor market has been surprisingly powerful against the tide of rising interest rates. What that basically means is that as the Federal Reserve has put pressure on the economy, pressure on businesses, pressure on borrowers with higher interest rates, they have not been able to effectively cool down the labor market. And the labor market is a problem for inflation because that means that a tight labor market means that more people are able to get paid more money because there's a shortage of labor. Companies are competing for workers and for talent. When that happens, the Federal Reserve's theory or philosophy is that those higher wages translate out into more spending in the economy, and more spending increases inflation. So with that being the case, the Federal Reserve has used very, very polite and educated terminology to say that we need more people unemployed, particularly in the service sector, other interest rate sensitive industries like real estate, tech, and several others are in the way of the Federal Reserve's policies right now. And that is a big problem for your personal credit if you're in one of these industries, or you are part of the labor conditions that the Federal Reserve is looking to suppress. You tie your personal credit to your ability to access capital. Your personal credit is completely dependent on your ability to pay your bills. If the Federal Reserve effectively is able to increase the unemployment rate, meaning potentially many of you who are consuming this content, if you are forcefully unemployed, your ability to sustain and expand your personal credit will absolutely be trashed. Because I want any of you to tell me any legitimate lenders or banking institutions that's going to lend you money or even allow you to keep existing limits on existing credit that you may have if they're aware that you don't have a job, that you don't have a stable income. This could play the same for your business. If you're a freelancer or actively working a business, depending on the industry you're in, depending on its sensitivity to the Federal Reserve's monetary policy, you could be at great risk. And as soon as you can't afford to pay your bills, as soon as you can't afford to show regular deposits in your bank account, this is when you're going to meet the challenge of being able to protect your personal credit. And the Federal Reserve, no matter how well intended they may be, is working tirelessly at the moment to make that happen. How is it that a credit union is going to be one of your best bets, or at least one of your best defenses against this economic and monetary policy? Credit unions are non-for-profit institutions. They are member-owned. Their objective is to provide financial resources and tools to the broader public, but especially towards those who may not normally be able to access it. Their goal is their members. For that reason, the credit unions are primarily the only institutions that are credible institutions that will provide the tools necessary to help you stem the tide if the Federal Reserve is successful in obstructing your income. If they're able to put policies in place and continue to raise interest rates, and this effectively completely puts you out of work or slows down your work or slows down your business, then that basically means that you're going to need some kind of financial tools to be able to sustain yourself and keep paying your bills. Credit unions are going to be one of the only places you'll be able to go and get short-term loans. Some of the only places you'll be able to go and get credit insurance that basically, in many cases, will allow you to pay into it in a small amount on a monthly basis and either help cover the cost of your debts or give you a cushion or possibly push out what you owe on various debts within that institution. There's credit insurance out there for situations like becoming unemployed or abruptly laid off and other situations. Credit unions are some of the only financial institutions that are going to offer these kind of features and benefits, these kind of tools. And you being positioned with them in advance, especially if you're in a high risk industry when it comes to interest rate sensitivity, and the Federal Reserve seeing your labor market or the field that you're in, like the service sector as an example, as one of those sticky areas that they have to actively work to try to disrupt and get more people laid off. You have to be cognizant of this kind of connection between monetary policy on the federal level and your everyday life. Your personal credit hinges on your ability to repay. And if you can't sustain an income, if you can't keep up an income, then your ability to repay is tanked. It's destroyed. That means your personal credit, thus, is destroyed. You have to be cognizant of this when you're watching the Federal Reserve, who at the time of this recording will likely be coming out at the end of July and a week and some change from now, raising interest rates yet again, because the labor market is sticky. So what you need to do is position yourself, if you're not already there, with great credit unions in your area, or if you can get into the Navy Federals, the Penn Feds, you can get into the some of these SECUs, and the list goes on. You know, some of these popular credit unions that many of you have heard about that have relatively easy access to get into, or you can go right in your local area. I can guarantee you there's multiple credit unions right within your zip code probably that you can join and get a strong relationship with in advance and study the products and tools they have available so you can be ahead of the game if you end up under the threat of the Federal Reserve's monetary policies. Protect your credit at all costs. It's literally going to be your greatest asset if you decide to use it, whether that be to preserve your financial position and protect you, or to bring you financial abundance and wealth that you've always dreamed about. Your personal credit is going to be one of the #1 tools in this economy, in this country, that's going to get you there. To all my pioneers, welcome back. To all my new viewers, welcome in. You guys want to learn more about the channel, links in the description below to learn more about the channel and to support the channel. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.